Maybe venture as we know it is unsustainable. The same way that, we as consumers in the society are inevitably driving ourselves towards catastrophic climate change. Um, you know, Valuations only seem to be going one direction year after year. And the pie is growing. And obviously, the 2019 IPO market is probably going to get a lot of people pretty stoked about the current strategy that they have. But it seems like at a certain point, this is going to become not sustainable. And we're going to have to think about how to change this up. I don't know what that looks like, but I'm just going to throw that idea out there that maybe we're looking at the early moments of ventures dead on its feet, and it's going to have to get rebooted in order to cope with the realities and finances.
What do you think? Do you think that the venture industrial complex
You can't
has...
talk about venture as one thing.
Yeah, let's talk about the venture funds.
Venture is bimodal, right? There are people who do very well.
Yep.
And then when you pile on more money than can be efficiently deployed, you just get a lot of terrible returns on the other end of the distribution, right? So I think that's like when you think about these demo days, the way to think about that is there's a bunch of people who are like, I got my $10 million because I did an angel investment that was good, and now I've got a fund and I'll write you a 100K check at 20. Like that, the way that I think about it is those funds are always going to be starting and going out of business. And then there's going to be folks who are taking, and maybe a more classic approach is the way to think about it. But there are folks who can find the value, find these things early. Like my strategy is go be first money in, right? And help them put this thing together.
Because you have a great network.
And I think there's a lack of pre-product market fit. It's very hard to sort of look at these things from first principles.
Yeah.
I could be wrong, but I think that's my comparative advantage. So I'm going to go find these things when they're messy and early and help them get to a point where it's obvious, right? So maybe that's a good strategy. Maybe it's not. But it's not going to demo day and just saying like, great, what's your cap? Here's 50K. I think that's the part that's unsustainable. So it can both be true that we don't.
It's like lazy venture. It's like lazy angel investing versus rolling up your sleeves and doing the work.
Well, I'll throw it out there that even when you look at the macro industry trends of all the big institutional investors, what is it, like the top 5 to 8%, maybe 10% are actually getting returns year after year, and the other 90% are not. So, I mean, that to me indicates that like we are already sitting on a fairly broken model where most of the people out there who are raising venture funds are not getting returns. Clearly.
Well, they're going to get some level of return. And the way I look at it is a lot of these LPs, like the big ones, are only putting sub 5% into the private companies, whether it's private equity or venture. So it's probably 1% of an endowment, 2% of an endowment is venture.
And it's risk capital.
Yeah, and I think they're just making a bet. Like, what if I get into the fund where Sequoia has WhatsApp? What if I get into Chris Sacca's fund where he hits Uber and Twitter? You know, I think they're just looking for something to balance out real estate and cash.
I don't think that part of the market is that broken, kind of the post-product market fit. It's interesting and it's changing, and there are going to be winners and losers. To me, the weird part of the market is this seed stage where the LPs are not institutional. It's all the money that couldn't get into those funds and is trying to figure out how to deploy capital into this market. You've got a bunch of emerging managers, some of whom are phenomenal and some of whom you won't know are terrible for, 2 or 3 funds. And that's the new normal, in my opinion. It's not going away. We're not going to have a contraction. We're just going to have a bunch of new funds over and over. It's the new, you start a successful company, you invest in people that you know who are known good, and you don't care what the ideas are. You look like a genius because they are good people.
Yeah.
Turns out that's not the problem you have when you run out of personal network to invest in, right? Then you become a professional and you have to think about these other things that you're not that good at. So figuring out who are the people who are good at doing this in the professional mode, I think, is where that money will train these people. And then those people will move towards these institutions who are happy to buy their IRR.
It's very hard for people to understand what's going on here, I think, because of the amount of startups that die and the amount of money that's put into those failed experiments. But they also don't look at the, how much cash Apple or Facebook or Google are throwing off now. You start looking at just the profitability of those 3 companies versus how much is put into venture. Like, those things are going to pay off hundreds of billions and eventually trillions of dollars in profits